All right, welcome everyone, and thanks for joining us. Looks like you can see me okay. I've got the webcam here set up. Let's see if there's any other adjustments to be made. Nope, I think we're good. And as far as I can tell, we're all ready to roll, and we're right on time here. It looks like it's 11 a.m. on the button here, Pacific time. All right, so with that said, let's get the show on the road. We have a lot of material to cover. We're going to look at automated trading systems, how to find the top 10 performers, and even look at live performance. And then also we're going to look at options trading with automation and how algos can help us do a lot of the heavy lifting for us. So we have a lot of demos to get into. And with that said, let's talk about speculating. Remember, we're speculating, trying to make money. So every time we're making money or trying to make money and profit, there is always risk. So before we get going, do take a moment and read the risk disclosure. It is important. And remember, all funds committed should be risk capital, and past performance is no guarantee of future results. And it looks like more and more people are joining us here, so we have a nice crowd developing. So thanks for being here again. And we're going to go quickly. We have a lot of material to cover, but we're going to look at technology experts use and something you've probably never seen, how we can diversify with this technology in various market sectors and strategies for up, down, or even non-directional markets. The whole idea is to avoid being this poor trader here, struggling with orders and what to do. You'd like to use technology to make life easier. That's the whole point. How do you trade in all these various market conditions? Trade the chop, so to speak. That's a lot of what we're going to talk about. We're going to look at two new solutions: automated futures systems, fully automated risk and profit controls, and basically they do the trading for you in various market sectors, and then algo-generated option spreads. So these are pre-built options trades, and there's also a trade alert functionality. We're going to show you that. You've never seen anything like this one before, and I can say that because I haven't seen it, and I think I've seen just about everything there is out there in terms of the options technology, but I don't want to get too far ahead of myself there. And with that said, let's go ahead and move forward. Here's what we're trying to avoid. We're using technology because we don't want to end up like this guy here. You don't want to necessarily just trust your gut. Our gut is not really a viable trading strategy. And then stick around, make sure you're with us later. We'll show you how to get a test of our unique trade alert. So we'll show you how to sign up for that. So stay with us. Like I said, we have a lot to go through, and I promise we'll use your time wisely, and we'll look at these demonstrations here. Then we'll have a special offer, something worth over $32,000, and that is not hyperbole. And then we'll show you how to get on board at an enormous discount or even for free, everyone's favorite word. So if you like what you see, we'll show you how to take action and how you can sign up and become part of what we're offering. A little bit about us, and then look at 3 trading barriers. And then while you don't want to swim upstream against the algo machines, and then we'll have a live demo of these trading robots. And then we'll look at the options market and how to use algos. And then, of course, getting started with that special offer we mentioned, and then some FAQs. And feel free to ask questions along the way. I may not get to them right away, but I think as we go through the presentation, you'll find out that a lot of your questions do get answered, and I'll do my best. A little bit about who we are. We are Altivest since 1997. We've been a registered introducing brokerage firm. All of our staff, of course, are licensed with multiple decades of experience. You may have seen us before in various outlets and venues, such as what you see on the screen there. We often get quoted in Market Watch. You can see here just the other day. And of course, we're regulated by the NFA and CFTC. We're located in California. So those are the 2 regulatory agencies that oversee our industry. And we've traded millions and millions of futures and options contracts over the years. So we're going to pass along what we've learned to you. So we don't want you to figure this out by yourself, like this poor guy here in his basement. So you can lean on us. We have solutions built with decades of experience and development from industry veterans. A little bit about who I am, yours truly. I'm Eric Gebhardt, been doing this about 30 years, co-founder of AltaVest, been licensed since 1991 with a BS in Business Administration from the University of Southern California. You may have seen some of our presentations in the past, just a small sampling, and if not, that's okay too. You're here now, so thanks for being with us. And just a little bit about how I got started. This is actually my textbook from an investments course, upper division course we had back at USC, and you can see we're looking at futures markets there, and there I was studiously, diligently taking notes and underlining, and I enjoyed that quite a bit, obviously. And we were looking at the oil fields in Kuwait burning, and crude oil prices, I think, had doubled. See the chart there. Gold prices had jumped. So that's sort of the background in which I learned about futures and options. And then I did get involved in the securities industry, doing some mutual funds and insurance with my Series 6 and 63 licenses. But I enjoyed futures and options a bit more, obviously, so that's where I've been since. And there you have it. So that's my background. And I've been in the futures markets ever since in various capacities, and now as an owner of a brokerage firm for the last since 1997. So with that said, now that we have the introductions out of the way, I'm going to go ahead and shut down the webcam for the moment. And that way we get a little more room on the screen. So we're going to look at 3 common barriers that traders have. I want you to make comments if you can relate to any of these. Feel free to use the chat feature there. Make any comments. Number 1, day trading. First of all, it's not that easy, folks. I think Mark Cuban's right here when he says everyone's a genius in a bull market. He's not the first to say that, but we can all relate to that. Sometimes we look in the mirror, and this is kind of what we start to think of ourselves. Hopefully, we don't get too far ahead of ourselves there, but I thought that was a good one. But really, it's not that easy. Here's Lance Roberts. He says he's commenting on people in social media. Don't know what the heck I'm doing, but I'm making money. And here's a comment from one of these people on TikTok. Been trading stocks for 3 days. I'm making $300 a day. I got 500,000 followers on TikTok. He says it's the blind leading the blind. I think there's a lot of truth to that. But really, when you're day trading, some studies are showing less than a 1% success rate. Here's the Journal of Financial Markets. They did a study several years ago, and I don't suspect the numbers would be a whole lot different today, although it's possible they've moved the needle a little. But it says here, look at the yellow highlight, less than a 1% success rate. So basically, day trader population, less than 1% of them can able to predictably and reliably earn positive abnormal returns net of fees. So it's not that easy to day trade. I mean, there are some people doing it and more power to them, but we're not trying to day trade necessarily. And if we are, we're going to use some algos to help us along the way. So we're going to show you that. We don't use this guy here, although it's kind of fun to have him in our office. Kids like to use this. So remember also when you're trading, you need 100% precision as a day trader. You need to pick the correct market, the correct direction, apply the correct strategy at the right time and price, and then even probably as important, if not more important, how do you manage that position in terms of risk and reward? And look at this here. I love these kind of studies here. Mark Skousen, he's an economist, and there's an article here on how monkeys are actually better than traders, outperforming the index by 1.7%, by an average of 1.7% per year. So interesting article there, but you get articles like that all the time that you can find and dig up. So here's the best trader of all right there, folks. Enjoy that chap there trading. And also look at this here. Even randomly throwing darts has been able to beat the top hedge fund stars. And now this is back about 2 years ago, but I don't suspect, once again, I'd have to look at the latest date. I couldn't find anything more current, but I don't think that dynamic has shifted a whole lot since then. Now here, number 3, the third hurdle. Who can relate to this? Let me know, everyone. Yep, people are commenting, thumbs up. So control your emotions. Remember, this is a great comment. It can be expensive trying to convince the markets that you are correct. It's from gentleman Ed Sequeda, featured in the book Market Wizards. I'd highly recommend that book. So you don't want to end up like this, letting your emotions get the best of you. And remember, hope, fear, greed, anxiety, frustration, all those things are running through our head all the time as traders. It even happens to the best of us that have been doing it for decades. There's a lot of noise in the marketplace. Who can relate to this here? You see all the punditry and all the people and noise with all their opinions, and really it amounts to zero. In fact, it's harmful. It's not helpful at all. But who can point out where they are on this curve right now in terms of starting out optimistically and you run up to euphoria and then the market's moving against you and you come all the way down to capitulation, you wave that white flag, then you become despondent. Now maybe there's a little hope and now you're optimistic again. So we want to try to avoid that roller coaster ride of emotions. But remember, we have bad wiring, so we're built with a bias to essentially sell the lows and buy the highs. You don't have to read all that, but we just have bad wiring, chasing past performance. And our brain is killing our returns. Quite often, I think that's true. I think that's a great comment. Motley Fool talks about we become our worst enemy. 3 common biases. I won't go into all of it, but confirmation, anchoring, and recency bias. And I think these next couple slides, I think you can apply all of those biases to these next couple slides. Let's have fun with this for a second. Social media. 2/3 of adults who have been investing for less than 3 years use social media to make stock trading decisions. So let's keep that in mind. That's kind of an interesting dynamic. But is that really wise? That's the question. Now look at this next slide. AMC to the moon. So they're having these parties now, pumping up stock prices, selling a story. And I thought this cartoon here summed it up perfectly. Here's the bull saying, "Sell me a story." The stock market fairy tales are now being read to him. So I don't know. I just had fun with that. I thought that was a lot of fun, so I put that in there. But let's try to avoid trading off of stories and narratives, and let's try to work on a process and something that's quantifiable, and that's what we're going to do. Remember, algos have no emotion and they dominate the landscape. 80% of the stock market dominated by machines. Robot analysts are outwitting humans. I think that was just bound to happen, right? From Bloomberg there, article. So revolutionary trading. And here's what it used to look like on the trading floor. When I was in New York, took a grainy video here down on the trading floor. We visit our traders and so forth. So it looked chaotic, but quite frankly, it was efficient and effective. But nonetheless, technology has taken over. And here's what the trading looks like now, folks. No emotions, they run automatically, built-in risk controls. And why are we going to look at systems? And well, let me give you an example. I think we can use these automated systems that we're going to look at, and I think you're going to see how useful they can be as a tool to help you diversify from traditional assets. So here's an example. Remember last year, obviously, stock market sank dramatically as the pandemic hit, and you see the VIX spiking up above 80 or right to 80. But meanwhile, as the stock market's dropping, here's an example of a trading system, and it actually performed quite well, very well indeed. You can see day by day taking various trades, some losing days, some winners and some losers, but overall, by the end of the month here, it had a tremendous gain. And of course, past performance is no guarantee of future results, so keep that in mind. But I just want to point out that as markets are moving one way, automated systems may be doing something completely different. They're agnostic and they can be short or long. It makes no difference. So we're going to look at that, how we can use algo systems to compete. We have a solution for you here. It's user-friendly, automated systems You can then filter. I'll show you how to do that for any system that meets your criteria. You can diversify in various markets. Risk and profit controls are all built in. And of course, you can set the machines to take those systems, and you can turn a system on or activate it, and then you can decide when to deactivate it. So we'll show you how to do all that. Markets are moving up and down. Like I said, the algos don't care. There's day trading and swing trading across multiple sectors. So we're going to look at the live demo here of the AV Systems platform. We call this our robot friends here at AV Systems. So let me go ahead and switch gears here. I'm going to jump over to the demo. Okay, everyone, you're now looking at the home page here, or the dashboard for what we call AV Systems. That's the algo trading platform. And we're going to run through a quick demo here. We're going to go through these top numbers here, or this sequence here. We're going to explore, show you how to subscribe, how to activate, and monitor the performance. So really, it's that simple. And you can see on the home page there are 25 systems viewing right now out of over 2,000 available on the platform. So there's a lot here to look at. So the first thing, how would you explore? Well, know that you can use this field here, and maybe you're looking at a system for the NASDAQ. And you can go ahead and search. And you'll see here there are 206 systems for the NASDAQ, or maybe something more, a little more tangible. Gold, 144 systems, maybe the euro currency. So anyway, you can type in this field, but really the best way to do that, and let me show you first before I jump into that, you can customize this table here so that you can use this functionality here so the table reflects any of these criteria that you would like, and I'm not going to go through that. We'll just use the default, but just so you know, you can have that table reflect anything that you want. You can also sort by ascending or descending order here. So you can see the best systems here have over 700% return annualized ROI, and the worst is negative 44%. I would keep in mind that any system that has big performance numbers like this is also going to have big drawdowns. So higher the return, higher the risk. So I wouldn't make too much of that. But how would you really decide on how to, explore the systems and how to choose a system? Well, I will show you that here. You use this tool here to filter. There are some quick filters that are out of the box, kind of the default. For example, look for systems that currently have clients and capital requirement of less than $5,000. So you click that filter, you see that filter's on, and now there's 47 systems that meet that criteria. You can click OK, and you can see they're all listed here. Now you can go back and continue to filter. Let me clear all those. And let me show you the really powerful tool are the advanced filters. So for example, you can look at risk and returns, descriptors, and track record. So those are the categories, and all these different elements here can be used as a filtering tool. So you can end up filtering, and by the time you're done, you have maybe just a handful of systems that meet the criteria that are most important to you. And let me run through here. How about trading live since last year till now? We'll add that. And let's go ahead. Oh, let me add that. There it is. So now that filter is added. So there's 288 systems here that meet that one filter criteria, but you can build on those filters and add more and more. For example, maybe we're looking at only intraday systems. So they're in and out on the same day. There's no risk over the weekend or overnight. So you can do swing trading or intraday. So we'll add that as a filter. So now you have 164 that meet that criteria. And we can go on and on. I'll pick one or two more so you can get an idea. How about live P&L? So live profit and loss. Let's just make up a number. How about 5,000 is the drawdown there with, I don't know, let's just make up a number, 20,000, anywhere in that range. Okay, so now you have these filters up here that you've added, and maybe we'll add maybe one more. How about annualized ROI? Something like maybe down negative 11% up to maybe positive 50%. And that will capture all those systems. So you can see here when I'm done with the filters I want, you can also then choose to edit any of them just by clicking on that pencil, or you can just close them out and add new filters by clicking that X. But go ahead, click OK, and you'll see that now you have these, this table here reflects the 65 systems that meet your criteria, and you can see the filters are in place with these highlights here. So that's how simple it is to actually filter for performance or criteria of any kind that really you find most suitable. And let me add maybe one more. Suggested capital, maybe up to 50,000 is one other. So now you have 47 systems that meet all these filters and criteria. And then of course you can clear them all, start all over again, and then we're back to square one, back to the default. So that is how powerful this tool is. Now, if you want to take any system that you found and maybe make it a favorite, you just click on this little star, the gray star, makes it a gold star, and then it'll show up here as your favorites. I've saved a few of these favorites. Let's just go ahead and drill down. Here's one called Samurai Copper. And of course, it's trading copper. You see the name of the developer up here. Copper, it's a swing trading system. It costs $75 a month, and that's deducted directly from your account. And of course, I want to point out that all the performance is net of all fees and commissions and costs. So all the performance data, percentages, and dollar figures is always a net result. And you'll see the track record here and all the data, and it has a suggested capital of 55,000. So all of that data here and performance is based off of that suggested capital number of 55,000. So that's what is we go by, is that 55,000 number, in this case, the suggested capital. And you can see here, let me point out some of the data here. I won't go into all the details, but if you're looking at any one of these, you want a further drill down, you just click on that little plus sign, that little bubble. And anyway, it gives you the winning sessions, the number, percentage, your best session dollar figure, your worst session, so on and so forth, percentage of time with open positions. And this is the important table down here. Let me explain this. Anything with a white background is back tested or hypothetical data, and that data already accounts for slippage and trading cost. And we do find that it parallels the real trading very, very highly. The correlation is almost 100% oftentimes. And now if you see this tan color here, that means the system was then placed on the AV Systems platform, and AV Systems began to track it. Then it turned green back in April 2019, and that means it's being traded with live money. This is real money trading, live money, since April of 2019. So all this data here is live money. You can see here in 2020 had a really great year, up 45.7%, and then year to date up about 3% so far. So nearly not as good as last year, but that's okay. Now, if you wanted to take a look, and I mentioned just about 5 minutes ago how some systems can perform well when, for example, traditional assets are not. So in this case, in March of 2020, when the stock market was collapsing, you see this particular system on March 2, I'm sorry. The license was deducted from the account and it started trading. It had some profitable trades, negative trade, some winners and winners. Then it had a sequence of 3 losers here and then some winners. But by the end of the month, the accumulated P&L was over $11,000, and that's net of all cost and fees. So had a great month in March, and that's just to point out that we like the non-correlation that a lot of these systems can bring to you so that you don't always have to rely on, the stock market just moving up in order to profit. Now, of course, past performance does not guarantee future results. So let's make that clear. I'm sure you've all heard that before. But nonetheless, did want to point that out. And also want to point out that any system can have a period of drawdown. So if you started the system here on March 20, you would have had a loss. The next day, the next signal would have been a loss. And the next signal after that would have been a loss. So, just the timing of it as well. If you start at the wrong time or the right time, can make a big difference in terms of, how you end up the month or the year. So that's kind of goes without saying, but I think it's important to point that out. Now here is this graph here, your P&L graph. You can look at it as a scatter graph, look at your maximum drawdown. I think that's important to look at. Sometimes people just look at the end result or the ROI and they'll not pay attention to the drawdowns. And that's okay, but if you're in it with real money and you're sitting on a large drawdown, you tend to change your tune sometimes. So you just have to be prepared to find systems that you think are going to be appropriate for you. So it's just that simple. That's how you look at any particular system. And I will go ahead and look at one more here. I don't know, but let's just look at this silver. This is obviously, okay, it's kind of been flat lately, but that's okay. Just another one. Had a huge year last year. Great year last year. Year to date now, it's down about 9%, so not so good. So that's why it's important to just be aware that the performance of any kind of trading, of course, is going to have, peaks and troughs. So the timing, of course, can make a difference as to when you activate that system or not. All right, then let's take a look here now at how you would activate or deactivate a system. Here is, I'm not sure if I had activated this one or not in the past, but here's a NASDAQ system. And you can see here, it's a swing trading system. It's $100 a month. Suggested capital $60,000. It's been trading live since middle of just about a year now. Had a great year last year, up 18% so far year to date. That's very respectable. And again, look at last March. It was hypothetical, but nonetheless, you see the system had some outstanding hypothetical backtested data and performance from last March. When the stock market was dropping, of course, these algos can go short. It doesn't make any difference to them. But if you want to activate a system, you simply click this padlock and you click buy license. Or of course, you can do the same thing from this dashboard as well. Just see that padlock icon. And then you would buy the license here and you would subscribe. So 1 unit is 1 contract. It's every month, and that's prorated. You want to read everything there about the terms and disclaimers. Now let's see if we activate this. I don't know, I didn't even check. I should have checked my demo account here for the account balance, but if you don't have enough money in the account, that's a great risk control too. So the system won't let you, the AV Systems platform will not let you place that, activate that system. So we'll just find out what happens. One way or another, we'll find out here. You can choose to immediately activate. You can, 1 unit here is basically 1 contract. If you did 2, then of course you're doing essentially 2, double the amount, but everything is based off of 1 unit and all the performance data. So if we don't activate, that's okay. I'll just show you what happens if it were to activate and go through. Yep, insufficient balance, and that's okay. That's okay to see. Let me show you what would happen if you did have enough of a balance in your demo account. And let me show you where to find it. It's quite simple, but I'm glad we actually saw that, because now you can see why it's a great platform for risk control as well. You're not able to just activate 100 different systems if you don't have the trading capital. But this is where you would go under My Systems. So if it were active, it would just show up here. And you can see at the moment this is live trading. The markets here are flashing in yellow, the pricing. And you'll see here's a crude oil. There's a E-mini S&P. There's 3 systems here, gold, mini NASDAQ, the mini Dow. So that's what's currently active in this demo account. And you'll see that for today, there were no trades here, but today there's a winner here in this particular system called Atlas, $455. It's accumulated gain so far of 19,000. So that's doing well. These 2 systems below it are so far negative. But by the aggregate here, you'll see the accumulated P&L over $30,000 with these particular systems here that are in the demo account. Now, if you wanted to deactivate a system, see this little target here, this little plus, you would simply stop strategy and it will give you this window, and you can choose to stop it immediately or simply not take the next signal. So just get out of the current signal according to plan and just not take the next signal, and then you click deactivate, and it's just that easy. So once you activate it, you can walk away and do nothing for as long as you want. And we had some people that get very active with activating and deactivating, and other people that, quite frankly, don't even, they activate and then maybe it'll be more than a year or 2 later before they deactivate. They just let the system run. So I think it kind of defeats the purpose if you're kind of overly trading and activating and deactivating. Now, let me show you, everything is transparent. So what do I mean by that? So nothing is hidden. You can see here, let's look at this Atlas ES. It's currently in one position here. And the closest order here is a stop loss at 4303.75. The last trade was a buy at 42.75. The current P&L is 10 points. Last traded at 42.85. The current P&L, so on and so forth. So everything is visible. You get to see what's happening. And you can see the fills here for the day. It tells you what's happening. You can also look at any orders that are currently open for any of the systems. So here's an order to buy, here's an order to sell, here's the price, here's the distance from the current market. So it's all right here and available. Nothing's really hidden from you in terms of the type of trading that's occurring. You get to see where you got in, you get to see where your next order's placed, so on and so forth. So nothing's opaque, it's all very visible and transparent. And let's run here and look at the top 10 real quickly. So this is how you can get a brief overview of the best trading systems on a daily basis or day by day. So the current session here. So these are the top 10 trading systems for the day. You see soybeans, you see wheat, copper, that one we looked at, Samurai Copper, silver, the mini Dow. So there you have it. That's how you just simply look at the top 10 for any given time period. You can see the previous session here. NASDAQ were the 2 top performers yesterday. Last month, again, NASDAQ performed the best in terms of these particular systems last year and then since 2001. So we don't have to go into all that, but just want you to see that it's all available for you, and you can view that on a net result or as a percentage of suggested capital. Yeah, you can't see the current because it's not booked yet, but So yeah, yesterday the best performer as a percentage of the suggested capital was a gold system, over 14%. So pretty interesting. And of course, you can just go right back to the net result, and that's just a net dollar figure. So you can see there the numbers flashing. So the best system today making over $3,200. All right. So with that said, I think that's a great overview of AV systems. It's very, very powerful, very useful tool, very user-friendly, easy to use. We get a lot of great feedback on this. People love having this in combination with their other trading and investing that they're doing. So we could drill down with some more details, but we have to move on. So let me move the show along here. Let me switch screens again. Okay, so hopefully that wasn't too much information at once, feeling like you're drinking from the fire hose, and I thought I always get a kick out of this one. But here's what a lot of people think. They think this is great, I want to do it, but I've never traded futures. Well, remember, the algos are trading for you, so you don't need to know about what the charts look like or what the fundamentals are with this COT report and the latest FDA, the USDA ag numbers, or the latest inflation data or ADP jobs, payroll, whatever it is. The algos are completely quantitative in nature, just simply trading on math and no emotions. So remember, if you're looking at trading in metals, there's algos for that, or energy markets, crude oil, you name it, stock markets, all the indexes, currencies. So remember, there's advantages with futures like liquidity, transparency, the inherent leverage of futures markets make them very appealing. And we mentioned diversification with alternative assets, easily short or long, and they're very cost effective. So with that said, let's segue into the options part of the presentation. This is the one market and solution I think you need to know about. Automated options, strategies for up, down, and non-directional stock index futures. So that's what we're going to be looking at. And we have a unique strategy proprietary to us. And now, first of all, why are we going to focus on stock market indexes and not individual stocks? Well, kind of self-evident, but they're less volatile compared to an individual stock. We have a proprietary strategy that really will not work with stock options. And we're going to look at just one market. We can trade just 1, 2, or 3 markets and not have to follow 4, 5, or 6,000 other securities. And here's an example of the volatility. We don't need to dwell on it. Here's Tesla. Look at these 100% move in a month, down 35%, up again, down again, up again. I mean, you get that a lot with stocks, not just Tesla. So large percentage moves, volatility. And with an index, of course, you don't get that much of a move just by default. You never will. Now, looking at insurance companies, maybe some of you know this analogy, and if you do, that's fine. We're going to get through it quickly. But if you're new, remember, insurance companies are making lots of money because you pay them premiums, and they're simply selling time. They insure themselves, and they hedge themselves, or they reinsure themselves, and they have a consistent patient model. And they look at math. That's really all they're doing. They're just crunching numbers, probabilities, statistics, actuarial tables, expected returns, and on and on and on. And of course, casinos do the same thing. They are called the house. And let's look at an example on that roulette. If you bet on that zero, $100, you spin it 38 times. On average, you're going to lose $5.26 per spin. So that becomes the house edge. Your losses become their wins. And that's just simple math. If you do it long enough, they'll want you to sit there forever, even though they will pay you large winnings at times. But long enough, they know that you're going to lose. The law of large numbers, we're all familiar with that. You flip a coin 1,000,000 times, you're going to get 50-50 if it's a fair coin. If you flip it 10 times, you might get 10 tails in a row. So now, how can you be the house when trading options? That's the question. Well, we look at higher probability option strategies. We like to collect premiums. We call these base hits by going short or selling options. We're consistent and patient. We need to manage risk, knowing there will be losing trades. But of course, you have to manage reward as well, not getting greedy. And you need the proper tools to make this work. So if you have the right idea, if you don't have the proper tools, it's not going to work. So remember, base hits, that baseball analogy. Don't have to be the babe here. We're looking at base hits. And that's what short option strategies are, premium collection. So not only can you have bullish and bearish, but non-directional strategies with higher probability outcomes and predetermined risk. So that's what we call a credit spread. Every position is insured or covered, predetermined risk and reward. And once again, non-directional in nature. Don't worry about this chart if you don't know what it means yet, but here's a credit spread on a stock index. You can see the stock index moving away, moving sideways to higher here. You have calls on the upside, puts on the downside. So you have this large, wide margin of error in this trade, and we're going to show you how that works. But just a second, a quick review of two Greeks we need to know about. We're not going to go in the weeds with these higher order multiple derivative delta, Greek. So we don't need that. That's not what we're doing. But just understand what the delta is. It's the approximate probability of expiring in the money. So how do we use that to our advantage? Here's an example. 0.25 delta means there's essentially a 75% chance of expiring worthless. So delta is always moving with price and time, and it is not the probability of a winning trade. Now, there's also theta, and that's sensitivity to time. Remember, options are a wasting or decaying asset. They have limited lifespan. So theta is a negative number that equals 1 day of time decay. So if your option's at 10 points and theta is negative 0.05, then the next day the premium would slump to 9.95, and then after that 9.90, and so on and so forth based on just theta decay alone. Here's what it looks like as you approach time zero. The value of that premium is really, really dropping dramatically, especially in the last bit of the options lifespan. So here's what selling a call spread looks like. Sell a 35.30 call, that's the red line. You collect 4.5 points, in this case on the E-mini S&P 500. And then at the same time, you buy a 35.50 call. You pay 2.25, but the net result is $112.50 that you collect minus your fees, commissions. And the same with the put. You sell an out-of-the-money put, you buy an out-of-the-money put as protection, but the net result here is 2 points or $100 in this case. Now, these are not naked options. Let's reiterate that. These are insured positions. Your maximum risk is known, and these are called covered option spreads. So do not trade naked options like these poor critters here. They need some fur. They need some covering. But here's another advantage to trading covered spreads. No margin calls, and of course, it's not unlimited risk. So if you're trading naked options, you are bound, you will, I guarantee you, blow up at some point. It's just a matter of when, not if. So how about this? A condor. What is an iron condor? It's a non-directional premium collection strategy. Very simply put, it's the combination of the put and call spread we just looked at. And here's what it looks like. Very simple. You sell a call spread above the market and a put spread below the market. You do it simultaneously in one order at one price, and that's what it looks like. And then you look for the market to kind of bounce around in that wide range. And then you end up collecting the premium, the net premium on the puts and the calls. Now here's our proprietary short option strategy. We'll reveal that to you now. It's called the Dragonfly. It's a name we came up with years ago, probably well over 10 years ago, and it has 6 legs to it. Now here is what the Dragonfly looks like. It's simply a variation on a Condor, and I'll explain this to you. Here's what you do. The red line are the calls that we're selling. We sell 4 of these calls. You buy 3 higher strike calls and 1 closer to the money call. Now the same structure, you do the same thing below. Sell 4 puts, buy 3 further out of the money puts, and then 1 closer to the money put. And that's the same structure for every Dragonfly. And I want you to note, if you can see on your screen, the call that we're buying here, the closer to the money call and the closer to the money put, these are 50 points closer to the money compared to the ones that you sold here and here. So you own this call and this put, and that means the deltas are higher. It also means theta decay will not impact it as much. So this creates a completely and entirely different risk-reward dynamic compared to a Condor. So essentially, you're buying a little additional insurance here and here. So you give up a little profit, but it creates a much more robust position, and it provides you some much earlier opportunities to get out of trades. And it can take sometimes a trade that would be a loser if it were a Condor, and it can be a winner with a Dragonfly. And then we're going to show you that. But here's the thing, if you look at this, how would you even know which strikes to choose? What expiration, what quantity, what value? So that's the same question, string of questions that Jackie Chan has. Which markets to buy and sell, which strategy to apply, what's the correct pricing, the timing, how do you manage the risk and the profits? Well, here's your answer, folks. Theta Trader. It's one of our couple of our traders down there on the floor trading options. Great picture. So anyway, pre-built option spreads, very unique. I'd have not seen this, and I look and I still haven't seen this. I don't know. This is something proprietary to us, and we're going to show you in just a second in a demo. So these algos that we've created have what they call theta trades every day, advanced strategy automation, bull bear, flat market strategies, automated risk and profit tracking, something called the RTI, the risk thermal indicator. And that's going to monitor and track your positions and then automatically close the trades out for you. So you have technology sort of scanning your positions, closing them out at the appropriate time. Simple, effective option spreads and management. I think that's key. A lot of times, there's things that can say, okay, place this particular trade. Well, then, how do you manage it? How do you monitor it? How do you know when to get out? That's usually something that people tend to forget about in terms of the exit. All you see are someone's stock picks. They don't really tell you much about the exit. But let's demo. So I need to switch gears. And before I do that, here we go, folks. Okay, you are now looking at the Theta Trader dashboard. We're going to show you all the tools in Theta Trader, and we're going to look at the trade alert I mentioned earlier when we just started about how you can get a sample, a demo for a trade alert as well. But with that said, let me magnify the screen just a little. So this is a Theta Trader dashboard. You'll notice this top section here is Theta Trades. These are your open short spreads or sold positions, and any open long or bought positions here. This is all your account info. This is all pulled directly from your AltaVest brokerage account and current quotes. So let's start at the very top. You'll see that there are bullish strategies that are pre-populated. bearish and non-directional. And we're looking at the E-mini, S&P 500, NASDAQ 100, and Russell 2000. So those are the markets Theta Trader is built and designed for, and that's the focus of Theta Trader. That's where the options spreads are most effective, and we'll show you why in just a moment. But since we've looked at Dragonflies and Condors, let's start there. So these are all the algo-driven Theta trades, anywhere from 17 to 63 days till expiration. In this particular case, sometimes it's a little fewer, maybe a fewer list of trades to choose from. It just depends on market conditions. But you'll see the strike prices are already selected and the pricing is already done for you. And we'll show you that, and we'll drill down here in just a second. You'll see the potential profit at expiration on every trade. This is your targeted annualized return at expiration. Obviously, the shorter dated trades here will have a much larger annualized return because it just assumes you're doing this every 17 days. But I want to make this clear. No one should expect these types of returns. These numbers are here, this TAR number, just to compare one trade to another, comparing one Condor to another. Okay, now go ahead and we'll go to the bottom. We'll look at the August end of month Condor. So the algorithm has already done the work for us and built the trade. Here's what it looks like on the graph. Here's the call spread above and below the market that we're selling. And we'll run through this just real quickly, but you can see days till expiration, settlement value, the premium, the put risk, call risk. Everything is based off of the put risk in terms of what's required to place the trade. And I'll show you that in just a second. The commissions. So the cash required, you can see, is $926. That's essentially the put risk minus the premium received, is really what that comes down to. But here's your profit potential at expiration, targeted return on cash, and then your targeted annualized return. Now here's a question we get. You're putting up 926, and the maximum potential here is 74. And people will sometimes ask, well, you know, I'd like to make a lot more money than that on a trade. Well, remember, we're collecting premium. We're going after higher probability outcomes and base hits. And what do I mean by that? Well, let's take a look at the puts we're selling. The 37.90 strikes, according to the algo, that's what the algo has chosen. The delta is 9.94. So that means there's over a 90% probability that this option will expire worthless. Now look at the call. Same thing, 6.43 delta. So over a 93.5% probability that these calls that you're selling will expire worthless. So that's the magic here, the higher probability outcomes. That's why the algo has chosen these particular strikes and these trades. Of course, you can also change those strikes if you wanted, but I think that defeats the purpose. It always pre-populates to a sell because you're selling a Condor as a non-directional strategy. Remember, we're under the neutral tab here. So we're trying to collect premium, always defaults to a quantity of 1, but let's run up the quantity to, let's say 6, and you can see, of course, the cash required and the money and everything all changes based off of the quantity changing. We'll leave the valuation here, or the price of the order, at 1.9, and we'll place that order. And that's it, just assumes we're filled in the demo. Now, let me show you the Dragonfly, and then I'm going to show you a really great feature, a backwards testing mechanism. We have a trade simulator for this. We can go backwards in time. Before I do that, I want to point out the Dragonfly. So we're going to look at the end of month Dragonfly for August. And here's what that looks like on the graph. And you'll notice the calls that you buy and the puts that you buy are 50 points closer to the money compared to the ones that you're selling. And you'll notice too that they're the same strike prices in the Condor. So these are the same puts and calls that you're selling. Now, you'll notice the cash required is higher, 47.44. That's because we're selling in increments of 4. So selling 4 puts and 4 calls. If you do 2 Dragonflies, this would be 8. If you did 3, it would be 12, and so on. And your profit potential, your targeted return on cash and the targeted annualized return is always going to be a little bit less with a Dragonfly. And that's because you are buying this call and buying this put, and that extra money you pay out, of course, impacts your potential profit. And we'll go ahead and do a quantity of 2 of these Dragonflies. We'll leave the pricing here at 6.8, and we'll go ahead and place that order. And now you've just placed a Condor and a Dragonfly. Now, let me show you, I guess you could call it a little bit of magic. There's a trade simulator right here. I've already loaded some to save some time. Let me squeeze this down. And let me explain what we're doing. We're simply going backwards in time. We're going here to May 1st of last year, and we're looking at the June end of month Condor. So if it were May 1st and you picked the June end of month Condor here, this is what would have happened. And you can use these buttons to go backwards or forwards in time. You can go one day at a time. I'm clicking here, and you can see as each day goes by, you can get an idea of the P&L, the trade's profitable. And this is all green, that means good, go, do nothing. And I'll go ahead and play this out. Just a second here. Okay, it's turning yellow and then orange. That means elevated risk, but still the algo says do nothing. Do nothing yet. And you're sitting on a small loss right now. Now it turns green again. It's back to a green P&L or black. And then it turns blue. So it took profit with 7 days remaining. Blue means take profits. And I want to pause for just 1 second and point out, and this is very, very important. You can automate this. Theta Trader will automatically close out your trade for you when it reaches a profit target. And I will show you where to do that in the settings, but you do not have to monitor it. Theta Trader will scan your trades for you and then close out the trades for you automatically. Okay, so that's a profitable trade on June 24 is when it took profits. Now, here's the Dragonfly. This is the same day on May 1st. So May 1st. So instead of doing a end of month June Condor, what if you did a June end of month Dragonfly instead? Let's take a look. Look at this. On May 28, you had profit taking signals. How does that compare to the Condor? You had to wait in that trade until June 24, almost a month later, before you could actually take profits and Theta Trader could move on and take your money elsewhere. So you can see how the Dragonfly was much more robust. It allowed for an earlier trade exit, allows you to turn your money over quicker. It just matured that much quicker, much more quickly. So let's look at another one. Here's a March Iron Condor on January 2nd. Let's run this one here. Okay, it turned yellow, a little elevated risk. The trade is negative. And then it turns red. So take a loss here on February 28. You took a loss here. Red means too much risk, and that can be automated as well. Okay, now let's go ahead and compare the Dragonfly. So the same day, instead of a Condor, you did a Dragonfly for the same expiration. Look at that. It turns blue. You have an opportunity to take profits. It would have automatically submitted that order for you. Instead of taking a loss here on the Condor with the Dragonfly, you would have had orders triggered to take profits. So that's the magic of these strike prices here that you own on these puts and calls. That's the big, big difference. And let's look at one more. We can go right to the end, but I think it's kind of fun to do it here step by step, like a game. So here's another Condor. It's turning yellow, turning orange, elevated risk. And then it finally turns red. Too much risk with 2 days remaining. So instead of the Condor, imagine we did an end of month April Dragonfly. See, that's the end of month April Condor. And let's run that through. And look at that, folks. Profitable. Opportunity to take profits on that Dragonfly according to the algo here and here. So instead of being in this Condor where you ended up taking a loss, had you done a Dragonfly, you would have actually ended up with profitable opportunities to close out that position. So it's a much more robust trade in many circumstances, and that's why we really, really love the Dragonfly. And that's how it stacks up against the Condor. It's not to say we don't do Condors, we do. But remember, a Condor will have a higher potential profit for a slightly higher element of risk compared to the Dragonfly. And here is where you would look at your closed positions. So you can filter for anything here that you wanted, or just look at everything on the page. There's 17 on the page. In the demo account here, I wouldn't, I don't want to suggest that everyone's going to have all winners all the time, but that happens in the demo account, especially when you're selling premium. These are higher probability trades. Let's remember that. So 17 trades, 17 winners, 15 short positions, and 2 long positions here, and the total profit and loss here. It gives you all the history here on these trades. If you want to drill down on any one of them, for example, here's a Condor. We'll click on it. And you scroll down, and there's the history of that trade. So you got in at March 31st, and Theta Trader was tracking and monitoring it. Ran into some heat here with the yellow and orange RTI, but still the algo said don't get out. And that's a key point, actually. It's a pretty good example where, if you were monitoring this on your own and trying to just kind of wing it, I think you end up being an emotional wreck. So that's why we love the algos to do the trading for us. And then there's where it took profits. And then, of course, if you're looking at open positions, so this is what it looks like. You have 7 shorts, 1 long position, and RTI is green, do nothing. You can look at this Dragonfly, for example. Let's see, June. Oh, those are the ones we just placed here and here. So that's why there's still a little negative. Theta decay hasn't worked yet. But for example, we clicked on this Condor here. Has 31 days till expiration. That's what it looks like so far since we placed the trade on June 2. All is well, and Theta decay is working its magic. It's actually getting very, very close to maturing. Probably by tomorrow, that might be triggered for an exit. And here's how you do the automation, folks. This is important. You go to settings and you simply automate the risk manager, activate it, and the profit directive. And then you click save settings. So then all your trades are monitored and tracked and processed for you whenever they hit a red or a blue RTI. I'll also point out we offer proprietary research. We have something called TradeScope. We do this, of course, in-house. That's proprietary. So we're looking at current market conditions on the S&P and stock indices primarily, and then what to look for ahead. And we also do a daily narrative here. We're looking at Europe and Asia and the US and what's on the economic calendar. So we're looking at these, you have access to this proprietary research, I should say. And also we have video tutorials here on Theta Trader and also education modules. These are all videos available to you if you need any review or like take a look at a primer on options and spreads and whatnot. But I think probably most of you already understand options pretty well. All right, with that said, I also want to point out one other thing too, that any calculation here is all net of commission in Theta Trader, all the percentages. And also want to point out that, of course, there are bullish and bearish strategies as well. You know, one thing we like to do sometimes is called a bull hedge or a bear hedge, kind of a name we came up with. And an example might be if you are looking for the S&P in this case to keep moving higher, you know, you could apply some bullish strategies where essentially you buy an out of the money call spread, but to pay for it, you sell an out of the money put spread. And then of course, Theta Trader will monitor that position for you just like it did with the other strategies. So it can do more than just the non-directional strategies. I want to point that out. And we do butterflies and, you know, back spreads and on and on and on. But there you have it, folks. It's a very, very, very powerful tool, something that takes something, makes something very complicated and makes it simple. So, you know, I've seen people trying to do Dragonflies with their securities brokers, and I've tried, you know, you can't do it. You have to do it in 2 separate orders, and you have to leg in, and you have to guess at the price, and you have to try to build it yourself. And then how do you monitor it? So it's just a nightmare. You can't really do it in those other venues, and that's why it works so well in the futures option space. We just there's a big advantage in the futures option space with just the way the markets work, and you can trade it as one object at one price. All right, now I'm going to show you the best feature of all. And thanks for sticking with me here, folks. I know we're spending some time on it, but that's okay. I put this time aside, and thanks for joining me. All right, so hopefully it's not too much information at one time. And can we make it easier? Yes. Let me show you how. We have trade alerts, and these are actually less than 1 minute. Let's just call it instant trade alerts. They're one-touch responsive. So you simply touch, accept, or reject on your smart device. That's all you have to do. So meaning the alerts they're live and they're active and they're integrated with your trading account. So if you receive an alert, you want to place that order, you just touch accept. You don't have to log into some other platform and try to copy the alert down. And, you know, people tell us all the time how they make mistakes, you know, copying alerts, and it's a hassle and on and on and on. So here's what it looks like. You'll receive a text message and you'll touch that link. I'll let you watch that and I'll explain it here in just a second. Okay, so let me explain that here. Make sure we can see. I should probably record a different one here, get a little closer, but okay, I want you to point out, I'll point out here that you get a description of the trade, a graph, and you'll see your account number and you'll see the net premium collected, the cash required, and then here the sizing is already pre-sized for your account. The quantity and everything is already implemented for you. Oh, let me go back. Let me do that again. So everything is already done for you. And you like it, you touch accept. If you don't like it, you touch reject. Just that easy. So here we go. If you want to receive a demo of a trade alert, you'll see in the questions window of your GoToWebinar pop-up there, You can just enter your 10-digit US cell number, and we also need the name of your wireless carrier. It's just the way the alerts work. And then we'll get you an alert via text. So that's kind of what you look for there. So if you want to go ahead now, yep, I see people, that was quick. But yeah, absolutely, enter your 10-digit US phone number, and then we'll get you signed up, and you can get an alert just to see what it looks like and kind of get the feel for it. But it's a really, really effective tool. People, quite frankly, can't live without them, is what they tell us, and we can't live without them, actually. All right, folks, yep, I see people coming on board here with the numbers. Very good. All right, I won't hang around too long there. Let's get the show on the road. Okay, so here's the, quite frankly, it is an amazing offer. I don't want to sound corny, but maybe sometimes I can't help. So here's a special offer for you. It's called our VIP offer, our VIP membership. You get access to AV Systems, which of course you see as our automated futures trading solution. Quite literally 20 years of R&D. Professional system programmers build these systems. That's their job. That's how they make their living. They've been doing this for many, many years. Thousands of system robots, multiple markets. Everything's transparent. You're in full control. You just flip the switch on or off. Automated risk profits. You can choose intraday or swing trading. You can watch live performance, of course. And we've spent a ton of money over the years developing, systems in the FX market and futures trading systems. It's costly. It's time consuming. It's not an easy thing to do, folks. In fact, we've calculated just one programmer creating one algo for one market, just one system, about $10,000, over $10,000. So meanwhile, you have access with AV Systems to over 2,000 professionally developed systems. Also, I want to mention we'll work with you in AV Systems with what we call our A-list research. You want to know if your systems are on our list, and we'll help allocate systems across your account. So that value there, $2,900 for that research. So with your VIP membership, remember you get AV Systems and all the algos, plus our input there with the A-list, a value of over $13,700. And then Theta Trader, we just saw Theta Trader, algo-driven options trading. It's a one-of-a-kind solution. The algo builds the spread for you, does the heavy lifting, simple tracking and, selection and trade tracking. I think people often forget the tracking part and the management of the position. And that's what the RTI is all about. Color-coded risk management tool automatically exits those trades for you. Everything's on autopilot. We talked about emotions earlier. Control your emotions. Well, Theta Trader can help you do that in a really big way. And then, of course, you saw the back testing with the trade simulator. That's a great tool to use. People love using that back testing tool. I've never seen anything like six-legged option spreads being back tested. So this is a one-of-a-kind technology. And of course, Theta Trades, the RTI, the simulator, the software valued over $3,500 per year. And those one-touch trade alerts are all part of Theta Trader. And remember how they're integrated with your account. You simply touch accept if you like the trade or reject. And then, of course, Theta Trader will track it and monitor the order from there. And then the RTI will automatically close that trade out for you once it's filled. That software there, almost invaluable, over $4,400 value per year. I have people telling us they're paying big money for quarterly, yearly alerts and whatever. So maybe some of you are doing the same thing. So you have Theta Trader software and the alerts valued over $8,000. So remember, just to wrap it up with the VIP membership, you have AV System software, which is your algo trading future software, and Theta Trader for options. That includes the trade alerts, a value of over $21,800. Now, here's the thing. Here's the best part. Because people think, okay, I want to do this. I want all the software, but maybe I'm going to be a little bit lost. Well, you're not. You have a coach to work alongside you. That's part of our VIP membership. One-on-one training with a Series 3 licensed and experienced trader. You'll have 1-hour screen sharing sessions. Uh, anything you want to talk about, really, but these are just examples. You know, selection of systems and diversification of systems, or maybe looking at theta trades, maybe some different advanced strategies with options, whatever it may be. We can help you with that. So you have a co-pilot. You can develop that relationship with a licensed trader, discuss and review your trades. That's really an invaluable service, valued at over $7,500, and I think that's way underestimated. I know people are paying $25,000 and more for trading education, and that's fine, but what we're saying is we provide what you need to work with AV Systems and Theta Trader. So with AV Systems and Theta Trader and that VIP membership, a value over $29,000. And just to sound a little corny, but wait, there's more. Remember, we talked about our proprietary research, TradeScope, and the commentary, valued over $2,900 for that research. Of course, we throw in those online video tutorials. I don't want you to forget that we have that help for you online as well. So that value total over $32,200 for everything you're going to get. And, you know, we think it's going to be worth it for you. I think we can save you a ton of money on various subscriptions that you can end up canceling, and save you a lot of time, that's for sure. We have people tell us often they can't live without this or that, or they've saved so much, you know, aggravation and grief. So we think it's worth it. And I know people are paying tens of thousands of dollars for systems. I've done it in the past. I remember even years ago, people paying $25,000, $50,000 for various systems to be developed. So what we're saying is with a VIP offer, we can offer you everything we've just talked about. It is a live presentation. So the VIP membership, we've offered this in the past for actually over 3,000. I think it was almost close to 4,000 now that I think about it. So no, it's we're not going to charge $29.97 or even $19.97. Big discount before Tuesday night, and that's through July 4 holiday weekend. So happy birthday, America. Want to make sure we recognize that. And one-time payment, only $7.97. That's a lifetime member, VIP member. This is one time, $7.97. And there's the link, cf.altavest.com/VIP. There's our direct phone number, 949-236-6961. That'll ring directly to me, yours truly, but obviously I'm busy at the moment. So call in anytime and it'll bounce to voicemail or someone else will pick up. But if you have any questions, but quite frankly, most people just go right to the website there, that order form page, and just sign themselves up, and then we'll get you onboarded. And there's a 30-day guarantee. So you have no excuse. If you think you're sort of on the fence, just sign up and let's talk and get yourself that discount. Make sure it doesn't slip away. 30-day guarantee on that membership fee. A few FAQs. Yes, futures and options are tax efficient. And no, a lot of what you're trading is not. So we can lower your tax rate by 10%. That's because we are in a tax advantaged space with what they call IRS 1256 section contracts. So it's a blended rate, 60% long-term rate versus 40% short-term rate. So tax efficiency, here's an example. You're trading individual stocks. You generate a 20% return. You're going to get 12.6% IRR after tax. But if you're doing trading with us, the same result is a 14.64% return. Basically, you save over $2,000 in taxes just because you're trading in a tax efficient space. And also no more itemizing. That's a real pain, isn't it? So you just get your 1099 and IRA. People ask all the time. Yes, we have IRA accounts every week. So self-directed IRAs are available through us. There are some financial and experience requirements, so ask us about that. So we do like the idea of an IRA if it's right for you. You can help diversify your portfolio, adding investments with a low correlation to stocks and bonds. So we like that a lot. And why the E-minis? They're liquid, they're efficient, they're cost effective, and they're actually huge. Kind of an oxymoron, but they're 2.5 times larger than all the ETFs around the world. And let me repeat that. People kind of get blown away at that. The E-mini S&P 500 compared to the SPY is almost 10 times larger in average daily dollar volume. Compared to all ETFs around the world, the E-mini S&P 500, 2.5 times larger. So you're in the right spot. We're in the right spot. And there's 5 additional reasons. I won't go through all these in detail, but the E-mini S&P 500s offer volume, liquidity, access, average daily volume there over almost 2.2 million. Superior execution, offer a cost savings of $4 to $15 per contract. A tighter bid offer spreads. And on that note, that superior execution, I kind of hinted about it. It's really, if you're doing Dragonflies with DataTrader, it's really, you can't do it anywhere else because it's one order placed as what they call one object at one price. You try to do that with other stocks and whatnot, you have to do it in 2 separate orders. You have to leg in, you have to make up your own pricing, pick your own strikes. It's just a nightmare. And then how do you even track it? Not effective or efficient. So largest market share, you have densely packed strike availability, 100 annual expirations, granularity and coverage. What does that mean? It means when our algorithm needs to find strike prices, it can find them. And that way you can have your various strategies and spreads laddered at different strikes and different levels. So that's why you want that depth of strike price availability. And here's a big point I want to make. We're tracking just 1 or 2 markets, not thousands. So how much easier is that? And margin use is much more efficient compared to stocks because of the inherent leverage with futures and options. And here's a big one, the clear cost structure. It's not opaque. And what do I mean? I'm going to beat up on someone in just a second, but remember, these are not securities people. People ask all the time, no, we are futures and futures options. Trade at the CME group on the electronic Globex exchange, and that means all orders, no matter how large or small, get equal treatment. So what am I kind of hinting at? There's no payment for order flow nonsense like you have with every stockbroker now, especially places like Robinhood that, basically that's all they do. Payment for order flow is fleecing the retail investor. It's not commission-free, folks. Robinhood customer orders executed at prices inferior to other brokers' prices. Inferior trade prices costing customers $34 million. Robinhood has fined $65 million from the SEC for misleading customers. People are trying to save a penny, but they end up losing a nickel. And if you're not paying for something, you're going to pay for it in a way you can't see it. And I couldn't agree more. Payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission. Nothing of value is truly ever free. So my point being, yes, we all trade stocks and that's fine, but it's not commission free, folks. So if you think you're getting some big break or some advantage, or you can now trade, effortlessly and on a whim and with reckless abandonment because it's not going to cost you anything. It's the exact opposite. It's costing you more than ever. In fact, it encourages over trading. So the question is, what are our commission rates? Theta Trader, our rates are highly competitive at 5.25 round turn, all in. Let me stress that's round turn, all in. That's everything. Now, I just took this the other day here off a large brokerage firm's website, a securities brokerage, and here's their rate on futures and options, 225. But if you look at the fine print below, it's per side. So when you get in, when you get out, and then they add more fees on top, like clearing and exchange fees. So the end result is it's higher than what we charge. So our rates are very competitive. Let's put it that way. And then with AV systems, the rates are all different, but it's all there listed in every system, anywhere from $7.50, I think, to $15. And everything, of course, is net of all costs. So I want to follow that yellow highlight there, reminding everyone everything is net. And then people ask about what's the performance of Theta Trader. Well, it's just a platform and everyone uses it and places trades differently at different times, just like any other brokerage firm. So everyone's performance is different. What size of account should I have? Well, if you want to use Theta Trader and have multiple Dragons and Condors and other strategies and have some systems going, we suggest $50,000 to $100,000. And if you want a free VIP membership, you start trading with $100,000. We'll gladly rebate that membership fee. People love to take advantage of that. So absolutely. And remember, we mentioned IRA, but of course, individual, joint, corporate, LLC, trust accounts, any kind of form of account that you would have at any other brokerage firm, we can do, obviously. And once again, to wrap it up, just to kind of where we even started, really, why alternatives? Well, they can improve diversification and lower portfolio risk, according to this article. And I know inflation's making headlines a lot, making fun of the Fed here as the three blind mice. They say they don't see any inflation, but I guess they've kind of admitted, but now they say it's transitory. So here's the CRB commodity prices, what they've been doing for the last year. Pretty much doesn't get more bullish than that. Home prices just accelerated at their fastest pace on record. Inflation expectations reaching their highest level since 2008. And here's the dollar, meaning meanwhile losing all of its purchasing power. Here's the Buffett indicator. You know, everyone looks at that. It's basically, you know, market cap evaluation model, and we're kind of at these sky high levels. But you know what? It could keep going higher. Who knows? So maybe there's a bit of FOMO going out, fear of missing out. But we like alternatives. Obviously, that's our space. Having an allocation to alternatives makes a lot of sense. And the reason I just showed all that is because, well, you know, nothing goes up straight up forever. Let's put it that way. So things start to slow down a bit, and maybe the market starts to choke and falter. You might be glad you had some exposure to alternatives. So here's portfolio 1, 2, 3. We like 3, having a slice of your portfolio in alternatives, such as what we talked about with a VIP membership. And we're going to wrap it up here just to summarize. Once again, VIP means you get AVS, which is the algo trading systems. You have Theta Trader, so automated option spreads with those one-touch alerts, and then bringing it together, tying it together, you get personal coaching. So we'd love to have you be a part of our winning team, be another VIP member. And another thing here about the gut. You don't want to be like this fly here, trusting his gut, landing right in the middle of that Venus flytrap. You need a process, something quantifiable, and that's what the technology we just talked about can do for you. So there we have it, folks. Happy 4th of July, by the way, over the weekend. But we're still here, of course, through the end of the week. If you want to chat with us, or you go directly to the link there, cf.altivest.com/VIP. That's how you can get yourself signed up and become a VIP member. And I did see a question or two come in, but I think I've already answered those. Yes, we talked about, well, I'll just go ahead and repeat it. People want to know if they can do this with their brokerage. Well, we are the brokerage firm. So just like brokerage firms have their own technology, so do we. So we'd love to have you on board. You just simply open an account, or people often transfer their account to us. We get transfers, IRA transfers all the time, for example. And no, it's not written in ink or stone that you have to have, you know, $100,000 or $50,000. If you have a bit less, that's okay. You're just a bit more limited in what you can trade. But I'd say the bare minimum is 25,000. And any other question that I didn't touch on? Canadians. Sorry, folks. If you're in Canada, we unfortunately can't accept Canadian accounts unless you have a legal U.S. resident. So if you're in the EU or Canada or many other foreign countries, there are just regulations that prohibit us from working with you, even though we'd love to. So, but if you do have a legal U.S. residence, that does work. Yep, we talked about that. We talked about, yes, we're doing, yeah, with AV systems, the developers, that's right. So there are developers that create these systems, these automated systems, and they put them on the platform after they've been basically vetted. And of course, people subscribe to them, and that's how the developers get paid. So that monthly fee goes to the developer, not us. We don't have anything to do with that. All right, folks, I think that's it. I think I see a few other comments and questions that I've already addressed, but thank you for joining us. And took us a while to get through that material, but hopefully we kept your attention. And thank you for joining us. And you are welcome to reach out and call us anytime, email, or just go directly to that link and pick up that VIP membership and get the great discount we're offering. And have a great happy 4th of July, and we'll talk to you soon. Bye-bye.